Hello, everybody. Glad you could join us for episode number 38 of the Launch and Beyond podcast, a podcast designed to support you in not only achieving great success in your business, but all other areas of life as well. One of the most common challenges faced by entrepreneurs and business owners is having enough money at different stages of their career to start, expand, or to scale their business. Many realize that the traditional pathway to raising money for business, i.e. going to a bank and applying for a business loan, is not always an option, particularly if they don't have significant assets or security behind them. So what can they do? How can they raise the money to start or grow their business? Many enter the realm of angel and private investors who may provide seed capital and management experience to help them grow and scale their business. But this area is a minefield for the uninitiated. But this area is a minefield for the uninitiated, and with many not even knowing where to start. Our podcast guest this week helps new entrepreneurs and rapidly expanding businesses find a funding solution that best suits them and their business needs. Willie Hill helps matchmake startup investors and entrepreneurs with private investors who may be able to provide seed capital to help get their business up and running. Willie will talk to us about how using technology such as artificial intelligence, how it's becoming more commonplace in the financial services industry, and how it will assist you potentially start and expand your business much faster than ever before. This week's episode is called Raising Capital. We hope you enjoy it. Well, good morning, everybody, or good afternoon, wherever you are and listening. It's very exciting to be with you again today. We have a special guest today, and I'm very excited to talk to Willie this morning, Adam. So before we all start, Adam, let's check in with you. How's your week been, buddy?
Yeah, week's been good this week. Getting into the rhythm of 75 hard. Today is day 41, I believe, and it's been raining for the past 3 or 4 days in Melbourne, I reckon. And I've just been running through the rain, constant runs. They're my first constant runs I've ever done for like 7-8 Ks. So just getting into that rhythm, enjoying the cool therapeutic rain coming down and ending up drenched by the end of it. But I feel like I've almost cleansed my soul and just my mind is clear and I'm just thinking a lot better. And obviously that's a happy byproduct of 75 hard, but the run is just accentuating it. And, you know, you talked about the runner's high before, and yeah. I'm starting to get it. And I still hate every second of running, but I'm starting to get those endorphins and my mind is releasing and my notes are getting better because I've just got more clarity at life. And it's been a great personal week for me as well. What about you?
Look,
losses?
Yeah, great. Look, I've had a great week. I think in anticipation, like here we're in the day before potential release of lockdown here in Melbourne.
Parole.
If you're really interested to talk to Willie, Willie's just flown back into Victoria after having that freedom. So perhaps you can give us an indication of what life is available outside of that. But look, I've had a really good week. I think this week, the anticipation and the whole roller coaster of are we getting freedom, are we not, has been a big theme and topic here in Melbourne. So I kind of have bought into that a little bit, where the rational part of me says we're not going out anywhere. But the part of me that lives with hope is looking at reintroducing some of those freedoms. So interesting time. I'm going to go for a run after our podcast this morning and experience that freedom, but I'm holding out in anticipation of tomorrow. So,
well, 0 cases today. So
okay,
hopefully that means that the numbers get skewed enough in our favor, and the dictator says, "Hey, you've done enough in the past, and you're free for parole, and you can get out nice and easily." But we'll see what happens.
We'll find out what that's like. So before we officially introduce Willie and all the great content and information he's going to add, perhaps we can extend that invitation to you, Willie, and tell us what your week's been like, specifically as you've flown back in from the Northern Territory, where we were talking temperatures of 35 and humidity, to a little bit different here in Melbourne. So what have been some highlights or wins and losses for you in this last week?
Great. I was going to say happy to be back, and at the same time I'm going to take it back. Yes, I'm glad that I'm back, because everything else I have is here. But yeah, I don't miss the state that we're in. Having said that, Northern Territory at this point in time is an amazing place. Coming into land at Alice Springs, and you just see the runways beside the main runway, and there's like 40, 50 planes all just parked along the runway.
Yeah.
All different airlines. There's even some Qantas ones in there.
Yeah.
I said, wow, what happened here?
Yeah.
Did somebody just stop and everybody just parked here?
Yeah.
Anyway, that's the Northern Territory. So I went all over the Northern Territory. I drove from Alice Springs, drove up to Jabiru, Kakadu,
Yeah.
where they had the mines, drove to Darwin. From Darwin, we drove back. And that's when I first experienced the swag,
Yes.
just a bag, and you climb in and you zip it up, and and you're looking at the stars.
Yeah, it's a fantastic experience, isn't it?
It is.
I was just saying to you just before we started, Willie, that I lived in Darwin for 2 years, and it always fascinated me.
Yes.
Within Australia, within our country, how the topography, how the flora and fauna can be so radical. And you said you've got background in Fiji, so you see that that kind of vegetation in Fiji. But what's fascinating in Victoria is to see the transition from a southern climate and how it changes from one part of the country and still be considered one country.
Still in the same country and still in the same country. Amazing.
Yeah, absolutely fascinating. So thank you for giving us indication of life and hope outside of the four walls that have become the state. I know we're joking about that, but we are looking forward to some freedoms. Even within our podcast, we've been recording this in a remote setting to support that. So even just being live and getting back into the studio is something that we're looking forward to.
Yeah, so I sent a message to Jim yesterday going, hopefully this is the last Zoom call we do for a little while, because it's a completely different experience when you're in a room all together and you've got a different vibe and you can see everyone's body language. Zoom is good. It's a good substitute, but it's a lot more fun when you're in real life.
In real life, face to face. No, nothing takes that place. That's a space.
So the advantage obviously has been that we've had opportunities to talk to people like Willie, who we may not otherwise have been able to with our in studio format. So I think we will occasionally use that when we want to talk to someone outside of that. But I totally agree. It's a different experience in that regard.
It is.
Yeah.
Well, I was watching, sorry to jump in, but I was watching the rugby last night and Melbourne Storm won, so yes to us. But it was up in Brisbane, and Brisbane Suncorp Stadium was full. People sitting next to each other around the whole stadium, and I'm looking and going, we're in the same country. Why are we so far off of this? And then I went and saw the football, and the football was the exact same thing, and that was in Adelaide. So, and you just go, how are we so far behind? It's just crazy. We're normally the front runners in this country, but we're stuck behind.
Just keep breathing, because it's going to happen. So, so Willie, officially welcome to the podcast. We love having a little bit of a check-in and a banter process prior to officially starting, because it personalizes you to the people who are listening. So that was really great that you shared that. But officially, tell us a little bit about yourself for people who may not know you or specifically know any part of your backstory. What would you like to share so people could get a hold of what you like and what your story's been?
Okay, great. Thanks for that, Jim. I'm literally in two spaces. When I say two spaces, I mean I'm in the startup space, and I'm also in the video production space. So I started off going to Open Channel Film Production School, and I did that. So I did TV production, and I went to church and did camera work in church. So filming the whole scene in church. So I got my camera experience from there and TV production from the school. And I've always had a camera with me, small zoom one. And then I've noticed as in the production school and all that, and said, you need to raise funds for your production, whatever you're trying to film, and filming costs money, and cameras, you need to hire cameras, you need to do the whole, a lot of things involved. And I said, okay. And as I'm doing these things in 28, 29, 2010, I also noticed directly lateral from me was the startup space. Doing exactly the same thing. Startup space and TV production space is exactly the same. The producer in the video production space is the founder in the tech startup space.
Mm.
So I just jumped from
Right.
the production, TV production, film production, into the startup space. And at the time, this guy had all these startup clubs, global. And it was Australia, it was Indonesia, and it was all over the place. So I said, hey, I'm in Australia. Let me admin that group for you. So he gave me Australia and Indonesia. So I admin these two groups. So now Australia has like 10,000 members and Indonesia has like 7,000 members.
Wow.
And while I was editing and doing the admin work, somebody in Europe stepped down and they were asking the members, anybody want to step up? I said, yeah, me.
Mm-hmm.
So now I admin a Europe B2B startup. And that's like 15,000 members in there.
Mm-hmm.
So, and I've started admin all these groups. So what I've realized, the most effective ones are the ones that are very centralized.
Mm-hmm.
They have a core theme. So I duplicated that in all the other spaces that I'm in.
Okay. Willie,
So
that's some, yeah, sorry, I was going to say, this is really, so when you complete, what I'd love to do, because you've highlighted some great points there, I'm just going to bullet point them and summarize them, because what you've just articulated there, if people could just take that wisdom, we could finish up now in terms of the wisdom of what you've done about taking opportunities when they present themselves and being open to the feedback that's going on. So please continue. But every now and again, we're just going to go, hey, Willie, stop. Tell me about that specifically, because
absolutely
you're talking about, oh, there's 15,000 members, and you go, hang on, but how did it get to that? There's a journey in itself.
Yes.
So if we do that, it's not being rude. It's just to go,
absolutely.
Hey, have you considered how important that is? So please go back to what you're saying.
Okay. So then I swapped over to admin this startup groups in Australia, in Indonesia. And then because I'm the admin, I'm reading through all the threads. And the most common thread is looking for funds. And the same thing in the video production, looking for money.
Mm-hmm.
And then you get the spaces where you pitching with 50 other people for the same $2. You know, you doing a pitch in the filming space and in the startup space. You know, they said, oh, you have to join a demo day where you present. And I'm saying, and the irony of that was I'm friends with the Melbourne Business Angels group, the chairman of the Melbourne Business Angels group. And so, hey, I'm going to do a production that's like Shark Tank. And he looks at me and said, Shark Tank, count me out. Why would you humiliate yourself in front of all these people? And I said, okay. So I just stepped back from there. And I took the information in. And then I sort of sat down at home and just go through all the different Shark Tank episodes that I've seen. And then I said, oh, yeah, he is right. You know, it's a humiliating process. Like you're going in begging, please, sir, like, you know, what was his name?
Mark Burris.
No, not Mark Burris. The Tom Huckleberry Finn. Tom Sawyer.
Yeah.
Please, sir, can I have some more?
Okay.
Kind of thing, you know.
I thought you said the Australian version of the yeah.
No,
Oliver Twist.
Oliver Twist.
That was the one. Please, sir, can I have more? Yeah, that's the one.
Yes, that's the guy. And all the startups are in like that. Please, sir, can I have some more? Like begging. And I said, I've joined that queue. And I said, no, there's got to be something better than this. And that's when I saw, okay, what do these people want? What do the people with money want? And then I kept reading threads. Some people wanted this, some people wanted that. And then I sort of trolled it down and, you know, filtered through all the threads. And then I came up with, okay, this is what these people want. What was missing in this equation was investors that if you knew what you were doing, you would have steered wide clear of. You know, investors with red flags, they called investors with red flags.
Yeah.
Okay, some investors come on board for the free lunch. Okay, you're a startup, you go to the investor, hey, I hear you're an investor, can I take you to lunch? And in the lunch, I'm going to pitch you.
Yep.
Okay, and the investor, yep, why not? It's a free lunch.
Yep.
What he doesn't tell you is, up front, I don't have any money.
Yeah.
But I could introduce you to somebody who has the money.
Yeah.
Because those guys normally spin in the same circle. But he doesn't tell you that. He just said, okay, I'm here. And then you go through the pitch and you go through the lunch and and then he said, afterwards, then he says, oh no, it's not a good fit for me. Then he comes up with some kind of excuse. What if you could take all of that and put the two pages on the same level platform and just go through, okay, as a startup, this is what you need to do. You need to do your due diligence, who's on your team, what sort of experience they have, how far they've come, what other previous projects they've worked on, like the whole spiel. And then you go to the investor and ask the investor to do the same thing. Okay, you're an investor. Do you have any who have you invested in? Are you current? Do you have sufficient funds to invest in future projects? Like the whole thing, so that these 2 pages will come up and say, wow, look, we're a good match. It's like Tinder on Startup Space. So, right? And hey.
Well, this is what in our introduction, that's really what we talked about was you matchmake investors with people who need capital and then funds. And so I was always curious because, you and I met on a personal growth and development workshop, Willie. So that was our background, but it was about a few months ago when you did a Facebook post. Where you raised, and this is how the genesis of why we're talking today is because you posted this stack of books in the private equity space and raising capital. And I was curious because it's an area of interest of mine. And I reached out and said, Willie, what are you working on? Tell me about it. I'm curious. And we had a conversation offline. I was really excited about a lot of what you're talking about and saw so much value in being able to communicate to our listeners. So I said, look, would you like to come on our podcast? And here you are. So I was really curious about what you've done. And if I can just backtrack and Adam, by all means, jump in if at any stage there's one you want to add as well too. But what I'm hearing already, Willie, is that you're already in that space. You already had personal experience and you dealt with the frustrations of raising capital in your own industry. And then you looked at this and you had at least the situational awareness to go, hey, there's something else that's going on here. And so the solution that you needed to find for one area, it was transferable somewhere else. And what you've realized over time is that this is the problem that not only just film production or this is transferable across the board. This is what I've loved about what you've done is you've come up with a solution that's applicable. And now you can actually help more people find the solutions they're looking for by just looking at a way of looking at things that's been different to the way everybody else looks at.
And being able to duplicate the process for any setting. Okay. So what we're going to do in Australia is we're going to take the Corporation Act. Okay. Corporation Act and all the other Business Innovation Act, put it together. And that is the base for artificial intelligence. Artificial intelligence will shift through this content. So when you put up a website as a startup founder, can I do this? This thing will tell you yes, no. Can I do this? This will tell you yes, no. Okay. Can I raise money from 50 people? This thing will tell you no. You can only raise from 20 people in a 12-month period. This is the catalyst of how you're going to work. Then from here, you jump to Singapore. Pick up the Singapore Corporation Act. You can duplicate this thing. Okay, let's look at what Singapore does. So you're in Singapore, do this. You can go to Europe, pick up the European Venture Capital Act, Corporation Act, put it together. How can I do this? Oh, this is how you work these things. Can I raise funds from anybody? No. Can I do this? No. And it's there. The knowledge base is there.
Okay. I want to come back to this because this is really big because what you're talking about is the solution. So we've gone from identifying the problem to you've identified the application of it, which is really big. And that I can follow that because I've had that previous conversation with you, but it might be a really big jump for people to understand how we got to that place.
Okay.
So, but the solution that you're talking about, which we're going to come back to, I think is actually brilliant. And this is what I loved about it. And I said, Willie, please come on and talk to people about this, because what the solution that you're offering, and I guess the answer you're offering to people is the how do I comply with regulatory requirements, not only here, but if you've got a business that's expanding globally, how do I ensure that I scale that? How do I ensure that I stay compliant? And how do I do that cost effective now with the right people? So that's really what we're talking about. We're going to come back to that, right?
Okay.
Let's go back a bit to give context, because this is going to really help people join the dots. So if you've highlighted and touched on it as we're going on, but can you just go through some of the major problems that entrepreneurs and business owners have when they're growing and scaling their business? So particularly if they're looking at location. So you've kind of given the answer, but let's just highlight it to give people the chunks so they can make the connection. What are the biggest challenges that business and entrepreneurs are going to come up against?
Okay. One is the finance.
Right.
And more importantly, how much finance.
Okay.
Because how much finance is a real red herring. Because people with money, those with funds that know how to play you, they can give you too much money, which will screw you over when you want to raise funds in the future. Okay, like you overcapitalize. You overcapitalize. You overcapitalize. And then when you try and maneuver out of that, it's very difficult. Okay, you've taken too much money. It would have been nice. So how I'm doing it, okay, if you're watching this podcast, the best scenario that you can accept is to be drip fed. Drip fed means you're only taking $500 a fortnight, and that covers your rent, whatever else. Don't take too much, don't take less. 500 is the level where you surviving quite well, and you manage to pay for the marketing and everything that you're doing. Okay, hypothetical. The 500 is hypothetical. The figure. Okay, so go with that. Okay, so it's 500 a fortnight. Okay, so it's 500 a fortnight. Go with that. You being drip fed. The good thing with that, okay, so I'm an investor. Where do I get my money from? I go to wholesale funds. I'm a VC. I go to wholesale funds. Wholesale funds are banks, super, insurance. Okay, I have a memorandum that I'm raising funds. This funds is for tech. I'm investing in tech. Department of Innovation will sign off on it, and this capital raising is for $30 million, and I'm funding 15 tech companies, 15 media companies, 15 worlds. Okay, so I've got all this money. You come up and you said, okay, I need some funds for seed funds for starting my company. Okay, submit to me your proposal on what you're doing with the funds, and why should I invest in you? What do you have that I don't have in the others that I'm looking at? And then you'll give me, okay, this is what I'm doing. This is how my unique selling point, why I'm different from everybody else. The best case scenario for me is to drip feed you. I'm going to give you $80,000. Okay, that $80,000 is for, say, 6% equity in your business. $80,000 is made up of $55,000 in equipment and space. I give you space, I give you equipment, I give you everything that you need. The $25,000 is for cash component. Okay, so you're running along. 3 weeks later, you and I have an argument. Okay, you're really not abiding by the rules that you said you were going to do. You tell me piss off and bang, and you go your way and I go my way. Okay, let's just close this thing. Let's forget it. This is not working both for you and I. Okay, that's fine. This is going to happen. Okay, what happens then? I have not lost $80,000. I still have the equipment and space, $65,000, and I've just given you $10,000 of the cash component. I am out $10,000, not 80.
Mm-hmm.
Only the 10,000 I'm out, not the 80. So when I go back to investors and they said, okay, you've invested in this, tell me about it. Oh, this is how we structured that deal. He got 85,000 or 80,000. 60,000 of that 80,000 was equipment and space. 20,000 was cash. From the 20,000, he only used $10,000.
Mm-hmm.
That to the investor is music to his ears.
Okay.
Because he hasn't lost $80,000.
Okay.
He's only lost 10,000.
Okay. Willie, can I just stop you there? So,
Yep.
So we can summarize it, so we can continue on. So, if what you're basically, because you're talking about both sides of the coin, which are really important. So, as an entrepreneur and a business owner, if you want to raise capital, some of the things that you're going to come up against are the raising the capital. So number one. Number two, you're going to have to also have a compelling reason why someone should invest in you. Okay. So their filter is going to be, okay, well, why should I invest in you rather than the next person? So you have to have a compelling solution or business plan that gets investors to get up and take notice.
Take notice.
So number three, you outlined that one of the problems they have is because people, entrepreneurs are traditionally cash poor, particularly in the early stages, and their cash burn rate is really high.
It's high.
If someone comes in and says, hey, I'm going to give you a whole lot of money, they're going to go, this is fantastic, and I want to take that. But what you're saying is the problem with that is that it's an overcapitalization initially. So what that may mean is that they're going to make less prudent decisions because they've got money. They're not as worried about whether they lose 20 or 30 or 50,000 because they've got that money there as a backup. But what you're also saying it from the other flip, as I'm understanding, is a process of someone investing is investing in a way that mitigates risk to them and their investors by only gradually drip feeding money in there. So effectively what you're doing is you're not just giving someone the keys to the bank and going, go for it. You're basically keeping them accountable along the way as you're going along. And Willie, we'll come back to some of the solutions that you were talking about, but I would anticipate that the model, that the key things that you would like entrepreneurs to be aware of is when you've got something that's worthy of investing in, you also have to have the awareness and discernment to say, am I giving too much of my capital away, too much of my equity away for the short-term security of capital funds, when if it's so good that someone wants to invest in it, do I just be smarter about how I go about strategically and not give it all away right now? Is that something to be aware of as well? Is the trade-off between having a short-term payoff versus the bigger game?
Okay. One of the things in startups need to be mindful of is what type of startup is the founder?
Mm-hmm.
Because not everybody is good for the long haul.
Yeah.
This is my area of expertise. I am good at starting up. I am good at putting a team together.
Yeah.
I am good at raising this. I'm doing this. Long haul, I don't see that. Mm-hmm. Can I, as a startup founder, just start it up, build it up, and exit? Is that what I want? Leave it for somebody else.
Sounds like my trait.
My area.
It is, yeah.
My area of expertise, or what I do well, is just starting, putting it together, leave. Get the great idea, put it together, put the team together, do all the due diligence required for a great team, leave. That's my area of expertise. So when I come out from here, I said, okay, I've done that before, and teams will just sap you up. Because you have the skill, the knowledge of how to put all of this together. Not everybody's a mechanic, but a mechanic is an important part of making the car move forward. But not everybody's a mechanic. Some people are the planners. Okay, we need a navigation system. We need this, we need that. And they're all different types of people to make this thing function.
Yeah.
Okay.
Sorry. Just to elaborate on that, I know a lot of people in the hospitality industry, that investors, like say lawyers or accountants, they're like, we want to diversify, shares are good, but we've already got that. We've got some investments. How do we open our portfolio? So they come to the hospitality industry, and then they'll hire a lot of my friends who are really good cocktail bartenders. Can you write our menu? So they're making a contract for three months. We will do the whole startup for you. And same as me as well. We'll do the menu for you. We'll do 3 months. We'll train your staff. We'll get everything right. We'll tell you where to get the glassware, and then we'll leave. I know a lot about that sort of, starting up the business and then moving on. So
then moving on to the next stage. Totally.
And I can see exactly that example. I'm so sorry. I'm just sitting here listening to you like a student going, oh, tell me more, please. Just tell me so much more.
Yeah, but this is spot on, because, and we've touched on that previously, Adam, too, where Michael Gerber wrote a great book called the E-Myth, right, which we've referenced before, when it talks about the entrepreneur, the visionary, the manager, and the technician.
Yes.
And what Willie, you're basically highlighting is you got to know where your strength points are.
Yes.
And where you got to know where you excel. So you're right. Some people are great strategically, but they're not great at the first phase of it. And some people are great closers, and people are, enduring legacies and companies. You need particular type of people. You need boards, you need accountability, you need compliance, all that kind of stuff, which for most visionaries and founders is too boring. They're not interested in that.
Absolutely.
So, but fundamentally what they do is they can start the momentum and they can see ideas and shifts and trends in the market that they're actually very good at monetizing and launching a process. So I get that. And so I'm loving what you're basically saying as a take-home message to people. So even in someone like yourself who's looking at matchmaking, you're identifying that there's some people who are better suited to certain things than others.
Absolutely. Totally agree. And for the startup to be aware of that, the awareness needs to be there. And honestly speaking, do I see myself 5 years from now in the same space? Is that exciting for me? Will that give me a buzz? That's not going to give me a buzz. What will give me a buzz? Can I repeat the same startup thing in here? What do I need to do get into that space? Look for people in that space. And then, we start from scratch. So these people with great companies, they didn't start a great company. Somebody else did. And then they just came for the ride, and they're in the driver's seat at the moment. That's all.
Yeah, that's fantastic. So I want to ask you some specific questions about that, but I want to preface the next phase of what we talk about by a disclosure statement, and basically saying that when we're talking about this, we're talking things of a very general nature. We're not actually making statements that can be construed as financial advice or directions, because we're not aware of the personal circumstances of the people we're talking to and listening, who are listening. So what we're doing is sharing concepts in a very general manner, in a very way that you would, if you wanted more information, you'd go specifically to your trusted advisor, either accountant and financial planner, to determine if this is right for you.
Sounds like you've got some legal mumbo jumbo over there. You got to tick off the box before we move forward.
We do, because part of the reason why it is okay, guilty as charged. But fundamentally, the reason why I reached out to Willie in the first place is because now I've entered the financial industry, and so I know that the accountability process that goes in there. So effectively, you just want to be totally transparent. And so when you enter someone's wheelhouse, you have responsibility and accountability for the direction. So if someone acts on that information and hasn't done the due diligence for themselves, we need to make sure that from the perspective of our own risk management, we're being really clear that we're not telling you what to do. We're just saying, hey, this is what we found. This is the information. Here's the avenue to follow it through. Absolutely. Well,
sorry, I just wanted to add to Willie a little bit. Like I've had businesses now for about 5 years, three different businesses. So I changed from catering, went to a bread bakery, and now I've got a cake factory. So I've moved through this process. But that startup does excite me, and that's why when I said it before, Jim goes, "Yeah, I've seen your journey. I know that startup phase does excite you." But I've always had, I've always been fortunate to have my dad behind me, who's had businesses for 30 years. So me being 27, 28, 29, coming in with my startup, coming to a big factory, it's a game that I don't know. The wholesale cake manufacturing, I didn't know any of that. I knew how to run a business because I've grown up in businesses. But then I had other people who were either competitors or friendly people in the industry that would come and go, "Hey, if you want, we'll give you this amount of money and you give us part of your business." And I had one really good friend who was like, "I'll come in and show you all the ropes, but you give me a part of your business." And I'm like, "Are you going to give me money for part of the business?" And he goes, "No, no, no, no. You get my knowledge, you get my portfolio, you get my contacts, you get." And I go, "All right, I might not have all the contacts in this, but I've been in hospitality for 15 years. I've got bigger worldwide contacts than you have."
Hmm.
But if I didn't have my father over the back of my shoulder going, "No, that's a bad deal for you," all the lights and, the glitter and the glam, it was very enticing. And me being in the startup going, "Hey, I really could use just that little bit extra money. I really should maybe." And then you sit here doing the sums, and then my dad comes in over the top and goes, "No." And
Yeah.
not because he hasn't thought about it. He thought about it, but he goes, "It's not the right deal for us." So then it gave me encouragement and it gave me confidence to go back to these people and say, "No, we're not right for this investment." And that doesn't mean that I've closed my doors to that. It's just, as you've outlined, drip feeding is a bit better, or, we both have to see our intentions on the same piece of paper, and they do their homework, I do my homework. And if it aligns, we're a match.
Yeah.
Then we can move forward. But I was fortunate to have my dad in the background. But what you're telling me now, I'm just sitting here going, "All right, yes, yes, yeah." I can see through my first 4 or 5, 6 years of business in my personal journey, I'm like, "Yep, everything you're saying is just happened to me, and I've seen it and I felt it." And I'm just like in awe. I'm just, "Yeah, all right." I'll just sit back here and listen some more.
Great.
Okay.
Willie, I want to ask. I want to direct the next phase of it specifically, because this will be a little bit about what Adam was just talking about. So, if because what Adam was talking about is elements of angel investing,
Yes,
venture capital, and there's another one particularly that shows up particularly for people, entrepreneurs or businesses in the property development areas of mezzanine financing. So, could you just briefly talk to people about those and perhaps what are some of the advantages or disadvantages that come up with those?
Okay. I don't have very much experience with mezzanine finance.
Okay, all right.
I have books on the subject, but
All right. Let's
mezzanine
talk about
finance.
Yeah.
No. What I'm trying to put into context is where mezzanine finance sits in this equation. Mezzanine finance is towards the end.
Yep.
Okay. We have the startup, we have the VC space.
Yep.
Okay. One of the other things that's happening that's fairly recent is the startup studio space.
Mm-hmm.
Okay, in a startup studio, very similar to a TV production of the studio, like Hollywood studios.
Yep.
Okay, so Paramount will run 4 or 5 different projects simultaneously, and they will shift people along. Okay, the good marketing person from season 1 of X Factor will move to season 2 of The Big and the Bold. Okay, the people get moved, but the projects keep moving forward.
Okay,
that's called a startup studio space. And so the studio is the one that come up with the idea. Okay, we're going to develop what industry can we focus on now? And somebody in there will say, okay, guess what? The whole world is in a COVID-19 lockdown, and we're looking for a vaccine. So in the startup studio space, somebody will say, can we find a vaccine? And then we'll sort of shift through the data. Okay, too many people in this space, too many vaccines are not effective until like 4 years later. Then we go through that, we shift through all the data. And at the end of 2 weeks, we say, do we still move this idea forward, or do we can it and do something else? So this is a startup studio space. So as a whole, everybody in there has a say in how this thing moves forward. You like it, lift your hand up. If you don't vote on it. Okay, that's a startup studio space. And okay, so next week they go on another topic. Okay, there's too much traffic congestion. How can we fix that? Or there's too much first responder. Okay, there's too many people on the ground that takes a long time for us to reach if there's an accident, if there's an incident, how can we reach them without all this traffic blocking us along the way? Can we fly up and fly to that person? All the different options. Okay. And from here, we say, okay, this one here sounds like a good idea. Can we just see if we can do something with that? Okay. So all the ideas are generated in-house.
Okay. So are you saying that you're talking the step before even the startup? You're talking about the innovation space, which are like hubs, like you mentioned, Paramount. So you're basically saying there are innovation hubs that are identifying a problem, and identifying and they're thrashing out the ideas to see if the idea has merit or basis or commercial application. And then the next level is they go, okay, well, let's do some due diligence around this, how this would work. So is that what you're saying?
Exactly what I'm saying.
Okay.
And that has more strength, because the people that are talking about or thrashing the ideas are experienced people, because they've done it before in other projects. Okay. And it's not just one person coming up with an idea saying, I've got an idea, I want to build a minimum viable product. Okay. So the people behind thrashing the ideas, okay, this won't work, this will work, this won't work, this will work. They have experience in doing that. Okay. And that experience is also backed by data. This worked because of this film worked because of these characters, and this is what they did. This was the plot. Okay, this was science fiction, and science fiction is the top money earner at this point in time. It's like a plot. So that's why some movies like Will Smith only does like science fiction kind of things sometimes. That kind of thing.
Yeah, the typecast for the same similar roles.
So we have the same thing in startups. Okay, so but it's like the hub that comes up with the idea. The only weak link at this point in time with this hub system is the funding. Because normally it's at this point in time, it's the people in the hub from the previous startups fund that hub. I have not seen the documentation that says that it can become a separate entity with the government for tax purposes. Why I'm saying that way is so that we can get tax deductions for our investment in it. Okay, because when you're in early stage venture capital, okay, we invest. Okay, I get the 30 million. I invest in all these projects. When that project moves from early stage venture capital to Series A funding, and we exit, we move out, we sell all our shares in that, of all the money in that comes out to us, 80% goes to the investors and 20% comes to us. That is the formula that's used.
Okay. So let's just backtrack there as well too. So what you're basically saying, and I can understand this. So the difference between a hub coming up with an idea is that you have a group of people who may be subject matter experts around a particular area who have different perspectives and viewpoints. So that'll give you eyes and ears and ask you questions about your assumptions from the very early stage. That once they've formulated an idea, as opposed to someone who wakes up one morning and goes, I think this is a great idea, I'm going to follow it, who've only got one perspective.
Absolutely.
So that's the advantage. And so as that progresses, they may come up with 7 or 8 ideas that may be great. And of those, one or two are the ones they're seriously going to back.
Yep.
So then they'll start raising capital. And I guess from an angel investor or a venture capitalist who's looking at making strategic investments in technology or businesses that are growing, they're going to be more inclined to support something that's gone through those filters than just backing one person who's got no experience, who's got no references or who's just, they're basically, you're not betting just on one horse. You're betting
Absolutely.
on the horse race.
Yes.
Okay.
Yes. That's a very good analogy.
Yeah.
Very, very good.
Yeah, that's how my brain works in terms of getting a concept and applying it to go, okay, so how is this going to be helpful? So this is helpful for people to say, if you want to raise capital and you seriously want to knock on the door of angel investors and venture capitalists, these are the things they're looking for.
Yep.
And you have to be really clear that you have to tick those certain boxes to raise capital.
Absolutely.
Good.
Absolutely. Okay. So let's take the wear the hat of I'm a startup.
Yep.
And I'm looking for investors for my product. One, I really need to know the industry I'm in.
Mm-hmm.
Who are the big players in this industry?
Mm-hmm.
And is the product that I'm developing applicable to people in Afghanistan, people in South Africa, people in Vladivostok in Russia?
Yeah.
I need to know that this market is a big market.
Yep.
Okay. Menu log and all that is fine for CBD and outer suburbs.
Yep.
But some of these countries don't have that. Okay, so my market is restricted. Okay, so one thing I need to do when I'm a startup, I need to what my product is, what problem it's fixing, and is it a global audience?
Yeah.
Do I have a global audience that will buy? And then I go out of where I am and I talk to people. Hey, this is what I've made. This is a mock-up of what I made. A mock-up. I've pasted. The website will look like this. I turn a page. This is what's written here. I turn a page. So the investor looking, or anybody, your customers looking, oh yeah, I can understand that. And what happens after this? Turn the page, you'll see it. You turn the page, okay. So the customer has in his hands a prototype of what you're going to do. Mm-hmm. Okay, this makes sense. Okay. How much will you pay for it? Okay, who else is doing something similar to this? Nescafe is putting out something very similar. They charge $50. I'm going to charge $40. Okay, that sounds good.
All right.
So you're talking about building almost not airtight, but building a great business plan that has so many contingency theories,
no, this is not a business plan.
No.
It's a mock-up of what it will look like.
Oh yeah. That's what I mean. Like you're making almost like a business. Yep. It's not it's for an investor's version of your business plan. So you've taken all categories, going, this is what our product's going to be. This is how we'll market it. This is the website. These are this is our target clients, and we're moving forward through that.
Yep. Exactly like that. Yep.
And these are the expectations that people who are looking to invest in your company,
they need to see that.
They needed to see that. They've needed to see that they can't, gone are the days, I feel, where people will say, hey, I've got an idea. I'm going to start up a food truck and back myself. No, a lot of the most successful ones, they've had it reverse engineered. And Adam, you'll know more about this than I do, that they've strategically got experience in the industry. They've raised funds, they've raised capital, they've done research, they find out who's doing what, where, how, what technology, and how can it be scaled. Yep. And even the hamburger place or a burger place doesn't necessarily open up these days with one location in mind. They've got a franchise system planned that they're just starting the first mother store from first.
Yes. Okay. So what you have there is there are two things that happen. When there's a problem, or some people just have the idea, which is a solution to a problem.
Mm-hmm.
It's a solution market fit.
Yep.
It fits like the burger food truck.
Yep.
Because people need to eat. So a food truck concept makes sense.
Yep.
But it's called a solution market fit.
Yep.
It's not a product market fit.
Yep.
A product market fit is the pain is so much that this guy will just give you money. Here, take my money. Shut up and take my money. Shut up and take my money.
Yep.
But if it's a solution market fit, the guy will say, yeah, but I don't really need it right now.
Mm-hmm.
I'm not hungry right now.
Okay.
Yeah, so solution market fit is the pain is not enough to make it give you the money.
Okay. So that's an important consideration
for
people who are in startup to say, okay, how relevant is this to not only my immediate sphere, but potentially the globe and scalability? So how many global applications can this be used for that would make the people wanting to come on board to do that? Whether it's a bank, whether it's, because that's effectively from a bank point of view, whenever you enter the space of commercial financing, what they're looking for are contingencies. They're looking for the what ifs. They've got to look for all the things that you may not have considered. They need answers to and a risk mitigation process to ensure that they're getting on the right horse, so to speak. So all these questions that you're talking about are about scaling it and having more applications than just one geographic risk, basically. Okay. Awesome.
Well, that's why I believe it's good as well. And I'm not saying for startups to go and waste investors' time, but it's also good if you're in a startup, you go to meet an investor and they start asking you questions that you probably have never even asked yourself because you don't know. You're still so new to that business game. And I'm not saying go waste their time, but actually have a meeting and go, I might need an investor for this. And then you go and they'll ask you questions and it gives you a mindset, or just as Willie said, he, is it a product, what was it? Sorry, Willie, product
market fit or solution market fit.
Yeah. So it gives you clarity on that as well. When you're going back and you start realizing, all right, well, maybe I don't know enough. And an investor, whether or not it's a financial or someone who gives you some, clarity in business, and you take a share from that, like almost almost like a coach, I guess. Someone to coach you along. It gives you that clarity. So there is a benefit for startups to look into this sort of field.
Absolutely. Absolutely.
We could be going down this path forever. Some specific time constraints that we all have. So I want to keep moving on, if that's okay, Willie, for that reason. A really important set of terms that keeps bandied around a lot in the entrepreneur space is fintech and systech. And a lot of times people have no idea what it means, but it's increasingly becoming important for this space. Would you be able to just touch on that and just give our listeners a bit of an understanding of what fintech and systech is and how it could be relevant to them?
Fintech is basically the financial industry. Any technology that aids the financial industry. Okay, so if you're making buying, shopping online easier, that's a fintech product. If you use a beacon for sales, okay, so whenever you walk past Rebel shop, your phone says sale on today for Adidas runners. That's a sale. That sale will convert into a financial product and exchange money. So that comes under that. Fintech is the next stage of fintech is a smart contract. Smart contract is like blockchain. Blockchain, excluding the cryptocurrency, because I cannot at this point in time take cryptocurrency to the bank and I said I want to swap. I want to buy 10 shares in New York Stock Exchange. The bank said, sorry, mate, we don't use those ones. But the underlying format for that cryptocurrency to work is smart contract.
Okay.
That's
Willie, sorry to interrupt. We're going down a whole rabbit hole down here. Can you just explain to people what blockchain and cryptocurrency is? Because for some people, they may not even know about that. So just so that they understand how and why that as a trend is coming through and why it'd be a good idea to understand a bit about that.
Okay, I'll just talk briefly about blockchain.
Yeah.
Blockchain is a decentralized ledger. That means everybody, you can create your own blockchain. Okay, you set up, you go to the bank and you go to your provider. Okay, so your supplier. Okay, say you own Woolworths.
Yep.
Okay, and you have people in the country, the farmers, supplying you all their veggies and all that stuff for. Okay, so in a blockchain smart contract, you, Woolworths, your bank, the farmers, the logistics company, they all have a say, and they all can see when one transaction comes through. There's transparency in that. You can say, okay, yep, we got 5 deliveries coming in today, and that's the cost. Everybody can see that. The whole thing is transparent.
Mm-hmm.
Okay, it's just that in this space here, they use cryptocurrency, which kind of sidelines a whole very good concept, the blockchain concept. Blockchain concept on its own is great. Then some people had the idea, okay, let's decentralize the thing and use our own money.
Yep.
And that's where it got, sidelined. But the blockchain concept on its own is great.
Okay.
So if you could come up with, like I'm saying, you own Woolworths. Okay, get the farmers on board, get the company that's going to transport the food on board, and everybody's on board, and that's a whole network. And that network will be able to see you through COVID, disaster, anything, because that network is strong. Everybody can see it. Okay.
So is that pretty much establishing a hub around your supply chain?
Absolutely.
Yeah. So that's what that effectively is. So you've got a system of ring fencing, so to speak, your suppliers and everybody in there to ensure a continuity of services to be able to operate and continue on. So that's in terms of blockchain. Great. Got it.
Yes.
And cryptocurrency is a means of exchange within that network.
Yes.
Great.
Okay.
Thank you. Got it.
Yep.
Cool. So if anybody was lost along the way, hopefully that's identify that in there. And why that's important is because that's probably becoming more and more of a trend in terms of how business to business will operate moving forward.
Yes.
Great.
Yes. Having said that, one of the things I see that might trip that up is the antitrust.
Mm-hmm.
Antitrust is the petrol stations.
Okay.
Price fixing in petrol stations.
Yeah.
That's an antitrust issue. That's why when people change their petrol prices, be very careful of how they change the prices, because ACCC can come down on this and say, okay, this is what you've been doing.
Yeah.
This is an antitrust.
Yeah. Got it. Yeah, got it. And the other thing that's coming up, and this is what I've realized too, is that the whole Anti-Money Laundering Act, which is a big factor, because with this is the thing about cryptocurrency and blockchain in there, is that you don't have the regulation that you do in there, and so it's become an avenue for money laundering. And so that's where I guess some of the, if they build in some regulations around it, we might as a society see more of a trend in the exchange of that as a medium. But right now that's the big area that's stopping its uptake because of the Anti-Money Laundering Act, which is really particularly important, particularly in the financial services industry.
Yep. And if you want to build a product, that'd be a good product to build.
Okay.
Anti-money laundering.
Yeah.
And in the blockchain.
Yeah.
How can you bring these two together?
Yeah.
And then everybody, all the stakeholders are happy.
Yeah.
Not feeling left out. So when we talk about blockchain, these guys just think, oh yeah, that's it. They don't want to address the money laundering issue or anti-money laundering issue.
Yeah.
They just talk about blockchain. Like if
Yeah.
you could come up with a product
Yeah.
that brought the blockchain and the Anti-Money Laundering Act,
Yeah.
if you could build an app, and like I'm talking about matchmaking,
Yeah.
get all the anti-money laundering documentation, all the Anti-Money Laundering Act, and use that as your base and build your product, your blockchain on top of that. So when anybody tried to do anything, no, yes, no, this is the one that will change. Yes, say yes or no to the whole thing.
Yeah. And with fintech, it's usually using, as you said, the financial services are using technology to come up with solutions for people in their financing. So here's where a lot of disruptor type financial services companies are coming into the space that are challenging the traditional banks. Well, even though, CBA, they're big investors in fintech technology, because what they're realizing is we have to, and it reminded me of a book by Clayton Christensen, who wrote a book called The Innovator's Dilemma. And he talks about innovation. And coming back to what you're saying, is you could be the established player in an industry, but you have to keep building in innovation in your own business model that potentially can cannibalize your own business. Because if you don't, somebody else will move into that space and wipe you out. And so this is what fintech.
Look at Blockbuster.
Correct. Yeah.
That's what happened to Blockbuster.
Yeah, and this is what fintech technology is doing. So right now, the digital platforms, and probably one of the area I want to ask you next about is AI, is using a way of financing for people that's taking the traditional turn up to your bank manager's office with cap in hand saying, "Can I have some money?" That as a model is going like the dodo bird. So it's really using that's where technology is in financial services. Just briefly, SysTech, what's that about?
Is that SaaS?
SYSTECH.
I'm not.
It's a term I'd come up. I just threw it out there because it was something I was SysTech. It's about technology, about systems. I imagine my understanding,
using systems process, or eliminating smarter systems. Would be a better word. And the other, probably the first cousin, is software as a system, software as a service. Like software companies, so if you want to get into financial or private equity, you just hire software, and they have an enterprise rate and the software, and all you need to do is outsource the responsible entity. There are responsible entities for hire. So you get somebody from there to sign off on all your administration. So just like that, you could sit up, use the software, and somebody sign off on your regulatory obligations. Have a person that signs off, and then you're free to go.
And Willie, I think you've highlighted very well why it's a minefield for a lot of people, because most people think the idea, hey, I've got one thing, I need $50,000. What you're basically outlining is the level of complexity, the level of regulatory obligations you have to meet, the level of due diligence that has to happen for you to raise money. And this is why for most people, either they don't do it, they don't get past first step, or they take steps that are considered very risky by either giving too much of their equity away for the idea of, I just need money to keep going until tomorrow. And so consequently, they're not doing these critical steps. So these are both a hindrance, but also a compliance and a risk mitigation process to ensure that in startup phases, let's be honest, it's a risky area.
Very risky.
And the chances of success are very low. And so what these processes are all about is minimizing the potential of things going wrong by preempting them or anticipating them from the start.
And also the other thing, because of this regulatory hurdles that you have to jump is also to protect the investor.
Yeah.
Okay.
Yeah.
That's
Yeah.
the other thing. Because if we had a thing for, okay, this is a good concept, but there's nothing to protect the investors, somebody could come up with a fintech problem, and with good artificial intelligence. And if we don't have that and nothing to protect the investors, bang,
Yeah, it's gone.
it's gone.
So, Adam, is there anything you wanted to add too? Because I could be talking to Willie all day about this, actually. So,
I'm pretty just listening.
yeah, okay, all right,
I'm
that's
pretty
cool.
good.
That's cool. So,
Jim, tell me what
yes.
you're getting into. You said you're getting into the financial space. What are you getting into?
Well, look, the area that I'm working on is I'm actually right. My objective, this is why I reached out to you, was I'm looking at raising capital not
Okay.
only just for businesses, but it's actually large scale projects. So
Okay.
effectively, the area that I'm moving into is raising capital for business developers. For me, it's actually looking at multiple countries who may come in together.
Okay.
Someone may come in and say, listen, I need to raise $100 million to do a project.
Yep.
Well, one bank, and this is what you're outlining, one bank's going to say no.
Yep.
So my matchmaking solution will be to bring several investors. Some of them may be private equity, some of them may be private lenders, some of it may be global banks, and piecemeal a deal together to get those over the line. So effectively, each and every one of them has to be done. Everybody's got to meet their own risk tolerance and mitigation. And so what happens is that you've got to be able to have the nimbleness to be able to answer all those questions you're talking about when you're dealing with a big scale project with multiple lenders.
Okay.
And then basically being compliant with all the regulations and all those kind of things. So that's where, the reason why I reached out for you was there's overlays with what I'm doing. I'm looking at a different area, and that's where the whole mezzanine finance was relevant. That's where it's coming from. But there's overlays in what you're saying, and whether it's you need $20,000 to go to the next level, or whether you need to raise $30 million to go global, a lot of what you're talking about is really important that people are aware in, and why the moment you start in this space, your head just blows off, because there are so many variations and regulations, but then also how many different directions you can go.
Okay.
So that was just an answer to that. But there's one question that's I've been busting for you to talk about. And when we had our private call in the lead up to this podcast, you talked about the increasing use of artificial technology and AI technology, particularly within the space of compliance. And you've mentioned at the start of our podcast. So I'd really love you to talk about how AI technology, and got to be honest, I just watched Social Dilemma on Netflix, and it scared the daylights out of me. So I'm kind of opening a Pandora's box here. But could you please talk to us about how the increasing use of artificial intelligence will be a game changer in everything you're talking about?
Yep. Okay. Let's just backtrack. When I first was still doing production, US had their own formats. Everybody else had their own formats. So there was NTSC, US, and PAL for everybody else.
Mm-hmm. Sounds like America.
Yes. You had two different formats. So I got a PC built for editing.
Mm-hmm.
So the PC had removable drives. So on the drive, I'd write NTSC and PAL. So when I'm editing PAL, I'd put in the PAL drive, and because it's PAL formatted.
Mm-hmm.
And when instead of buying two separate editing or PCs, I just had one PC, but was able to remove the hard drive and put the other one in, and that was formatted that way. The operating system was the same, but the editing hardware was different. So that's how I got the concept. Okay, so where we are now, globally, what's going to happen for you is they all have different legislations. your compliance has to comply with all those different legislations. So the best bet for you is, okay, let's look at all the global players. Who's a global player? European Union. Okay, so you need one to format for the European Union. USA, you need one to format for USA. Canada, format for Canada. So when I say format, I'm taking the Corporation Act, their VC Act, or any other act that they need, that you need to be aware of as a person raising finance. So that I got all of these ideas from, I used to be a prison officer.
I didn't know that.
So
I didn't know that.
When you charge,
just slide that in there.
Now, where I brought this up was prisoners, you could charge prisoners for offenses.
Yep.
But it had to be within the act.
Yep.
The Prison Act. So, okay, what's this guy? Oh, he was being a funny bugger.
Mm-hmm.
Sorry, funny bugger is not written here. Okay. So, and that's the same thing with whatever we're doing. You need fundraising. You need the Corporation Act. Okay. What are we doing? Okay, we're raising money for this project. Okay. And does what? Give me some details of the due diligence of that project. Okay, this is what is required. Then you flip through, you get the artificial intelligence to go through the whole lot, process it. That's not here, but this is what's here. This is the data that's here. Okay? And all of this data is from the Corporation Act. So they are very relevant data for you. So whatever you're doing, you need the Corporation Act, you need the VC Act, you need all the other acts, Parliament acts inside there as your base. Okay? Yeah. If you're going to do equity crowdfunding, you need the Equity Crowdfunding Act. You need the Corporation Act. You need them to sit on top of each other. So when you said, okay, what am I doing today? Somebody who wants to crowdfund their short film. Okay. What's a short film about? Okay, this. And that will spit out okay, this is what needs to happen. This is the due diligence you need to do. This is the things that you need to have. So then you take that and you said, okay, this is what's happening for you. So in your case, you need the Corporation Act of the players. If you're going to engage private equity companies from Canada, you need to have the Private Equity Act for Canada. Mm-hmm. Okay, you need to have all the Corporation Act for Canada in that one space. Okay, so that when you're talking to them through the Act, through the VC space, through all of that. Okay, so to do a generic, it's going to be very hard. Yeah, because there's no generic law that applies globally. There's no generic law.
I'm towing the line of, do I go down put the tinfoil hat and go down conspiracies, because it seems like we're not far off from that global law and all that stuff from all those talks that we're seeing through social medias and the social dilemma and all this stuff. It looks like it's becoming more of an even playing field.
Yeah, this is the Corporation Act.
Yep.
Globally, all countries will have a Corporation Act.
Yep.
This is how you register companies. If you want to start a business, this is the things that you need to do. So if you're going to Europe, the European Union, if you're going to England, UK, because there's a Brexit, so this guy no longer belongs to the European Union. So you have to come up with a different one for him. Okay? In Europe, this is what you're going to need to do. You need the Corporation Act, and you need all the other relevant documentation. So that if somebody comes up and somebody in Europe said, okay, let's just check this guy. He's doing money laundering for the Chechen Republic.
Yep.
They won't get you, because artificial intelligence will filter through and said, okay, they don't have a leg to stand on. You've complied with this act, you've complied with this act, this is your due diligence.
So, because this, like I said, this has opened up 75 different trapdoors in my brain in terms of that. So, in the financial services industry, for example, you have what are called aggregators.
Yes.
Now, aggregators are the people who bring all the options to one place, and you as a broker plug in the coordinates that someone needs, and effectively a solution comes up for you. And
Yes.
so what you've got to do is you've got to plug in, look, we need to come up with a solution that fits these criteria. So what you're saying is AI technology and platform, and it's particularly the solutions that you're offering and your in your product space, which we want to find out more about in a moment, is really designed to take out the trial and error of people, to ensure that if they have got a global vision of what they're doing, they're compliant, not at the end of it. They're not flying into Canada going, hey, I'm here, Canada. They go, no, you should have filled in this paper and that paper. And you go, oh, man. Sure. How many times do you hear that story, right? So what this is basically saying is this filters everything through as an aggregator does.
Yes.
As it's effectively a sophisticated filtering system
Yes.
to ensure that not only are you coming up with solutions that are best fit, but also that are compliant.
Yes.
So that as you progress along the chain, you come up with the solution that meets all those criteria.
Yes.
So you're saving time, you're saving money, you're saving potential fines, and you're saving a whole lot of other complexity, which is problems that entrepreneurs come up against.
Yep. Okay. So the best solution for you, Jim, is when you start off at Australian funds or funds.
Yep.
And that's the one that goes and seek funds.
Yep.
So that your investment plan is, I'm going to invest in 10 early stage venture capitals. Okay. And there are rules for every early stage venture capitals. Okay. So if one startup pops its head up, only 2 of these early stage can invest this. Like there are rules you build into that. Okay. Only 2 of your early stage venture capital can invest into one startup. And that startup we can only invest 40% of the total funds that this guy started looking for. So this guy still has to go and look for 60%. You providing 40, but with that 40, you can instruct this startup, or you can work as the lead investor and said, okay, let's go and look for funds everywhere else. So that for your investors on top, the people that you get money from, they said, okay, that's your risk management plan already. You're not putting 100% of your money into these 2 startups. You're only putting 40%. It's risk management already built in.
Yeah. And
the rules for all of these people to play by, I can only give you 40% of the money. You have to go out and ask for another 60%. These are rules you're going to play by. These are the rules you're going to agree when you come in and be part of this scenario. That's the rules you give out to them.
Yeah.
Okay. So that protects you from your investors. So when you go back to them, hey Jim, hey, come sit down. Not, hey Jim, I'm busy at the moment. Can you come make an appointment next week?
Yeah. And it's actually quite relevant you say that, because one of the biggest advisory companies in Australia, I was just reading about it in the Financial Review this morning, have had a whole series of their investors now suing the company for decisions that they made. That, that's it's a big story. So what's happening is there's increasing shareholder activism.
Yes.
So there's so what you're basically saying, and this is what I'm taking about this. This is why this is such a huge topic. Is it's not just about getting the money; it's about the responsibility and the obligations that people who give you the money have to the people behind them as well.
Yes.
And there's all these layers of I'll do this for you, but I can only do it for this much because the law says this, or I've got these other people going to chew me out if I haven't met these criteria. Yep. So you've highlighted exceptionally well, really, I feel, why this is a confusing area, and you can't navigate it, like Adam said before, with experience from his dad, by yourself. You will, but you're going to basically the price of trial and error. Yep. And it's invaluable to have someone, particularly who can navigate you and point you in directions that are going to save you time, money, and perhaps making some big mistakes. So I guess final question that I had before I ask you where people could find out more about you, Willie, is, are there particular industries that are going to be impacted on the most with with this type of technology, or are there particular industries that are going to be most amenable to AI technology in this kind of space?
I'm pushing this. This is my agenda.
Right.
Okay. So what I'm doing is making sure that nobody's left out.
Right.
Okay. Agriculture technology, I'm going to step into that space and said, okay, this is how we're going to do this. You can jump in or you can not take part. That's your choice. Okay. But this is how it's going to run. This is how it's going to roll out. I see the plumbers out of the building industry. The Sparky's got a good deal because they could also fix the electricity and plug your computer in. So they had the internet, they had the audiovisual happening at your home. The Sparky's got a free ride, but the plumber didn't. Okay. So I'm trying to look at the plastering guy. Okay. In my previous life, I used to be a concreter. On your hands and concreting.
It just keeps going deeper and deeper, doesn't it?
What have you not done, Willie? Are you actually a Highlander? You know, the Highlander was like, I'm actually 300 years old. I've done everything. But go
So
on.
yeah, after you finish concrete, and what's the time? Oh, 3:30 in the morning. So you just roll over and lie down and sleep.
So what you're basically saying is, and this is why I was fascinated and intrigued when we first spoke.
Yep.
Is what you're saying is this, and the avenue and space and the product solution that you're working with and on.
Yep.
Is transferable on a global level. It's transferable to multiple industries because it's principle based, but then also basically complies with all the requirements of any business as opposed to just an industry.
Yes.
Well,
I've made it that way because I'm saying, okay, why should these guys be left out? You know, and what's the option of bringing them on board? I don't have anything to lose. Okay. Look, I'm going to talk about this one topic. Why is China doing so well in COVID?
I don't know. You tell me.
Because they can see the person who has COVID. They've got lenses,
Right.
heat sensor.
Yeah.
So when you're coming up and you've got heat sensor and you think, hey, step that side. They can see. Anything. When you have clarity, you have the upper hand. When you have clarity, you have the upper hand. So China had a second wave, went down again, because they could see anybody. All we had to do was make heat sensor glasses and all, you know, the kind of lens.
Yeah, thermal lens.
Yeah, thermal lens, exactly. And so that we could see. So anybody walking in front of us, okay, just step that side, just step that side. That's all we had to do. We would not have this second wave or third wave. That's all we had to do, just step aside. And all these guys with a high heat, or if it doesn't, everything complies, okay, go this way. You, what's wrong with you? Okay, you got this, go this way. Easy. All it was is just a thermal lens.
Yeah, we've got thermal cameras on the entrance for our building. So when people come in, staff and visitors, they all get thermal read.
Yep.
And actually, I was in Dubai in late February. So, and I was doing a convention. I was a chef at this convention. And day one, everything was fine. But we saw, because I went there last year and the previous year, the attendance was down.
Okay.
Then day two, they came in. We were filtered through one door and there was all thermal sensors everywhere. So we had to walk through the thermal sensors to get through to the convention. And it was just covering people's bases more, like, you know, just being more cautious.
Yep.
And that's I guess what your AI system is trying to be, you know, just trying to be a bit more cautious at your investments and moving forward and both protecting investor and startup.
Absolutely. Protecting everybody and just filters. When you have clarity, you have the upper hand.
Yeah.
You know what you're doing because you see, okay, this is what is, there's nothing else. This is all there is. There's nothing else. There's no hidden agenda. Okay. It's when you don't have clarity and, okay, I think I need a shiny hat today because, you know, this guy is coming from Mars.
Yeah, no, this is all cool. This is all cool. What were you
I only
saying?
put this hat on for the podcast. The rest of the time I got my foil hat on.
Willie, look, this has been fascinating and illuminating to show people the complex path of cap raising and why it's both exciting but then also confusing for a lot of people. So for anybody who would want to find out more about you and all the previous roles and tasks and jobs that you've done in the past, in addition to, because if someone contacts you, go, yes, I used to be an actor, I used to be this and that, so they'll probably find out that. But seriously, if someone wanted to be in contact with you to find out more about this innovation that you're working in and how it's applicable to them, how would they do that?
I'm on Facebook, Willie A. Hill.
Yep.
You can contact me through that, or willieahill@gmail.com. Easy. Just drop me a line where you're at and how you looking at using or wanting to use artificial intelligence to help you. I'm a great proponent of using AI. I'm linking up with the AI team in Sydney. There's a AI venture. I'm going to link up with them and see what we can do. Link up with AI people in Silicon Valley and just be in the space where AI is happening, so that, okay, that's what's happening. That's, and different things will pop up, and different people working in different spaces and using AI in that space. AI is for all of us to share. Nobody should predominantly be, okay, I'm the only one that's using it. Let's share it. It'll come around. What goes around comes around. So
well, as you mentioned earlier as well, you've got to be an early adopter of some of this technology, because it's been adapted and it's been developed. And if you don't jump on board early, you could be left behind. So it's definitely great to get into the game nice and early and sort of feel it out while it's still developing. So then your mistakes aren't catastrophic mistakes. Like when everyone starts adopting it in 10 years' time, you've already been there for 10 years. So or 5 years, and you're just like, all right, we had this issue, but it cost us $1,000, not $1 million.
Yep.
Yeah. Well, Willie, I'm going to start closing out our podcast now, because it's we've really grateful for the time you've allowed us to have a chat to you, and I think anybody listening here will have realized just how important an area is and how global they could be thinking about what they do. Because if they can focus on a solution, a problem that they're finding an answer to, if it's very solution based, it'll be helpful, but it'll perhaps be contained geographically, and it may not excite investors or venture capitalists to the level that they would hope, because it doesn't have the global applications. But if you can come up with a business plan that it engages people, has multiple applications, will benefit many people throughout the world, and you ensure that you comply with all the requirements, your chances of raising capital to expand, grow, and scale your business increase significantly. So absolutely. I think that's probably the biggest takeaway in there. So Willie, I believe people will want to find out more about you, at the very least, to be able to know where to go. And certainly in talking to you about that, I've gotten some directions and ideas that I even, I'd love to have a chat to you offline about how you see trends and how that'll work. So I'll definitely follow that up with you. So for me, I just want to thank you for being part of the podcast. And I realize it took a little bit of coordinating and doing to get you on here. So the planets lined up enough for us to have you on here today. So thank you very much. And Adam, once again, thank you also. Final comments from you, Adam, before I do our outro and we're done?
No, I'm just happy to have learned so much today from Willie. So thank you, Willie. It just gives me an insight of how to sort of gauge, do I need investors? How do I, even if I don't want to get a third party into my business, how do I do it internally in my business to actually build a structure so that I can raise capital with myself? What commitments can I make with myself that I go, all right, well, I need the clarity that Willie keeps talking about. This is what I really need. This is the structure. This is where I want to go. how do I set up my capital raising? Do I go through a bank? Do I go through someone who doesn't take part of my business, a percentage part? They just give me the funds. How do I best suit that for my business? So Willie's given me a lot of insights into that today. And
you're welcome.
Yeah, I want to keep 100% on my business, but some people don't. So, but you've given me ideas on how to approach raising capital in that way as well.
Yeah.
Yep.
Awesome.
You're welcome.
Well, it's been a pleasure having you on our podcast, Willie, and I want to thank you. And I also want to thank everybody once again for joining us on this podcast. If you've been a listener of our podcast, you'll realize this one was a different direction. But for the people who really needed to listen and hear and find out more about the journey and the complex journey of raising capital, this one's for you. This is just a reminder also that you can connect with us on Instagram, Facebook, and the extended Launch and Beyond community on these channels. If you've got any questions or comments you have about the podcast, or anybody you'd love to have on the podcast that will expand what you're already learning, please let us know, and we'll make every endeavor to reach out and invite them onto the show. A lot of times the questions and thoughts you have are the same ones that everybody else has. So it'd be great if you could just put them in our forum so we could share them with our extended community as well. The impact and the dialogue will have a much greater ripple effect than you may even realize. If you're enjoying the podcast and finding value in it, we'd be grateful if you could go over to iTunes and leave us a review. This will allow us to reach a larger audience and help more people. From me, thank you, and bye-bye.
Thank you.
Thank you very much, guys.
Thanks for having me.
Anytime.